Everyone came in. Westport Resources came in. Now we have, as a pension board, if you've looked at our pension plan, we have kind of very strict, boring investment. So people really don't want to do it. We're a 60-40 split. Any bonds we can use have to be investment grade A, so we can't use any junk bonds where there's a high, or corporate bonds, I guess you call them, where there's a high yield. So we're kind of stuck with a lower, safer yield. We strive for a low beta risk. We strive for low risk, and obviously we're trying to keep a low fee, so our money wouldn't all go to fees, managers' fees. So we invest it. Our goal, which was set years ago, is 8%. We're supposed to have an annual return of 8%, which obviously in this climate is high. But as of June 30th, we were at 7.92%. So we're pretty close to our goal, mostly because of some really good years here and there where we'd make 12%. I think one year we had 20%. And we definitely had bad years where we had 1%, 0.5%, along the way. Our actuator then takes the amount of people, takes their ages, takes what they contribute, their percentage, and it's different for different unions. And then when he thinks they're going to retire, how long they're going to live, and he says you have to contribute X amount. Also, he takes our rate of return. Now, we use a blended rate of return. So basically, there's not a big clump in any one year. Either way, if you look back, you'll see some years our contribution has gone down, and this year it's obviously gone up. He used a blended rate. It's blend over 5 years. He said that's all the government allows. They allow a 5-year blend. So he blends it to try to keep it a more reasonable increase. And the increase this year is based on that, based on our return being less than it should, under our 8%. The amount of people, we have more people in our pension. And he does it, and he says, here's what you got to contribute.
Can I continue? The assumptions were made, I think fiscal year uses 630?
Yeah.
Okay, so the investment experience is 630.08 was the prior 12 months.
Right. For this contribution, it only goes to 630.08.
Right.
Now, since that date, we have done the same thing everyone else has done. I think since June 30th to today, I think we've lost 20%. We're minus 20%.
I guess one of the questions I had, and you had some discussion at that meeting about, I can't remember if it was November or whenever I was there, we had experienced some bad performance, as everyone in the world has.
Right.
There was some discussion about whether we should contribute more because we knew what was ahead of us.
Right.
In other words, we're okay through 630, but things fell off the cliff, since July 1st. Wondering if you had more discussions about that, or what the decision was.
We had more discussions about it, and we haven't made a decision on it yet. And I guess the answer is we don't know. We're kind of going to wait and see. We thought everyone was already panicking that our request had gone up already. And to be safe, should we ask for more now? Absolutely. But I guess what our actuary says is right now he can't justify it. I mean, he knows what's coming. He said, should he build in an extra? I think if you were there, were you there when he was there?
Yeah.
Okay. He talked about trying to build an extra % now, and we really didn't decide on it. And it was something we have to talk to the trustees about. Do we want to build an extra %? Which would mean a lot more money now. I think he said 1% would add, I think, about $250,000 to our contribution. I think we said at that meeting that it's a tough year to ask for an additional $250,000. Saying that, because as we sat there that day, we said, now this was in November, we didn't know the market was going to keep getting worse and worse. As we sat there, we talked and said, maybe by January, who knows, the market would back up to 9,000, 10,000. So it's tough to say throw money in a really tough economic year when you don't know what's going to happen. And I guess we could all guess by now that it ain't looking too good, right?
Yeah, anybody else have anything?
I have a couple, but you can finish.
No, I'm basically done. I mean, everybody's read in the paper what's going on. Town of Fairfield pension lost a heck of a lot of money with the Madoff scandal. And, I read in the Bridgeport Post that they were putting in an extra $1.5 million, not only this year, but for the foreseeable future, I'm sure.
In a perfect world, would we like to come to you and say, we need more money, yes, but, as a matter of fact, I thought you were coming here to say, we don't care what your actuary says, we want you to put in less money, to be honest. That's why I thought
No, my feeling would be to put in more.
Yeah.
Personally speaking, because we know what's happened already, and, why put off the inevitable?
Look, I don't disagree with you. I just, you heard a discussion. It's a tough budget year. We knew it was going to be a tough budget year even in November before this even happened. And we thought if we went to the town with, asking for it because it's not going to get better by next June, we thought, I don't know if we'd be laughed at, but we didn't have the actual numbers, at least right then,
Sure.
to back it up. But our actual agrees with you, Mike. He said, look, in all probability, we're going to be in tough shape because the numbers we have aren't really reflective of what's happened since June, and a lot's happened since June.
Yeah.
Do you have any idea what's happened since June?
Yes, our particular fund, I'll give you just a for instance. Since June 30th to March 2nd, which is the last report I got printed out, our particular fund, we're down 20%, for that time period. So we've gone from 25 million down to 20 million, like that. Spending all those years building it up.
How about year to date?
We're since inception we were 7.9%. We're now down to 4.54%. Year to date, I think we're at 1.11%. Just so you know, all our numbers, we're above every index. We beat every index, every bond index, believe it or not. So we're above all the indexes. But I mean, look, there's our chart. That's year to date. That's what happened to us.
Do you have copies of that?
I'll give you these. They're my notes on them. But
Maybe you can
they're just so you know, these are public. They're on the website.
I understand. I don't know.
But you could have these.
Most recent stuff. Maybe if we could have copies.
You could have these.
My question, Tom, would be, it's obvious that it's obvious that we have an issue. It's obvious that everybody has an issue. I guess my question is, and it's obvious that given the numbers that you've articulated, there's two things that you can say that in the world of investments, performance is a relative term, and it sounds like relatively you've done fairly well. I don't.
Relatively, we've done fairly well.
Right.
I mean,
that's an oxymoron. in
Right, I
my
agree with
mind.
you.
Yeah,
We've done
it's-
lousy. I mean, we're down $5 million.
The market's down 30, you're down 20, you're
Right,
still down.
right. I agree.
I got it. I guess the question I would have for you is would it be, are we putting it off? Are we putting the issue off? I mean, you made the comment that you didn't feel like it was important to come at this time, or you were, I don't want to say afraid, but reluctant to come at this time and request more money, but in theory, we know it's coming, right?
Well, you're assuming the market's not going to correct between now and June 30th. See, I'm hoping it's going to, but but right. If
When
we
you say correct, you mean appreciate.
yeah, I mean we're down to what, 6,700 today or something. It's the lowest it has. It is the lowest it's been in years. A year ago we were at 14,000.
Well, then I'll take the question a step further. What would it have to be to obviate the additional money that you think you might need? I guess my point is that nobody expected it to get to this point. It's
Right.
obvious that we're well below. I mean, you're basically 55% of what your goal is.
Right.
Not from bad management, just from the facts.
Right.
Okay, so my question is, are we just postponing the inevitable?
If the
And,
market
and is the goal to hope that it gets higher so that inevitability is, we're trending at 6% and it's another, my point is it sounds like we're going to need something at some point. And just the sheer dynamics of the numbers and the math of recovery is going to be sizable.
if we end up down a percent, 1%, I think it's an extra $250,000. As of right now, we're down 3.5%.
Yeah, so we're looking at almost $1 million.
If everything stayed exactly like it is, I mean, we lost $5 million, and not from Bernie Madoff taking it. Our money was taken out and put in cash. Trying to conserve what we had. I think we're mostly in cash now. But the problem is when you go to cash, you also have a realized loss versus an unrealized loss.
Some of these questions are somewhat generic just for the sake of the venue here and the recording of it. But I guess my point is are we being foolish by hoping? I think there's an awful lot of hope going on in this town that things will come in at a certain number and or get better. And I don't know that that's a prudent method of managing. And I guess my question to you is, should